Okay, now let's come back to the markets. Bank of Baroda was one of the biggest losers in trade today. The stock sliding by more than 9% despite reporting steady asset quality in the fourth quarter. So, Latha, what was the big concern? I mean, the management did come out and say that the worst is probably behind the bank, but the street not entirely buying that?
No, actually, in Q3, they said that they have done all the kitchen sinking. So again, when slippages came at 6,000 crore, 5,932 crore, that was a negative. But more importantly, it was the guidance. They said they identified 27,000 crore of iffy assets. They are either restructured or they are in what you call SMA2. SMA2 means loans which interest has not been paid for 60 days. Okay. So now they have to pay within 90 days or they become NPA. So that total of 27,000 crore, what the managing director said is that say about 55% can go bad. That's 15,000 crore. Now 15,000 crore is a large addition, but he said I will recover 10,000 crore, which means 5,000 crore is the net addition to NPA, but it could be 5 to 10,000 crore was the worst case estimate. That's what the market took very badly. One hopes it will be 5,000 crore, then it's a good show. But suppose it is 10,000 crore, that had to be priced in. There will be a bottom at which people will buy the stock, but at the moment people thought that that bit of guidance had to be priced in, which is why there was all-round selling. But the brokerages are divided. Citi, CLSA, Axis have a buy. Their targets are between 170 and 180 for the stock. Credit Suisse and Deutsche Bank have hold. Their target is at the current level, 145, 150. And then there is a sell or underweight for Morgan, Prabhudas Lilladher and JPM. Their targets are 125 to 130. Take your pick.
All right, so it's a wide call out there. Let's listen in to the bank management now.
The maximum corporate exposure we have to any single lending institution is not more than 2,000 crores. And some of these large accounts in the iron and steel sector have already moved into the NPA category. I would think we would grow our balance sheet by at least 10%. So to that extent, there would be some denominator effect. Net, we are looking at, for the purpose of planning, at 5,000 crores of slippages, and a potential amount being 10,000 in a kind of a more stressed scenario. I think it's more about having the proper processes in place. Our collection people have a war room. Almost every single account is tracked centrally from here and then from the zones and then downward. So there's a lot of emphasis on making sure there is recovery.
Okay, so